A bank is a very low risk entity. I mean, they have the responsibility of holding your capital. I mean, a lot of people's money, it's all the money they have in the world, and they can't fail, right? So the risk that they are willing to take on is pretty minimal. A lot of it comes down to that collateral, right? So banks are equipped to feel comfortable with real estate collateral, with cash, and so from, again, a liquidation standpoint, they see a lot of value in taking that collateral. They're not equipped to really spend the time like we are to understand a cash flow model to manage the cash flows, and so they're just not going to be able to execute like we are.
So a lot of construction business owners we've spoken to in the past, they think financing is something you go seek when you absolutely need it, or when you're desperate. Like you wait till you win the project, or you're about to win it, or you have a problem and then you try to seek lending.
We are a product that is not only a replacement for banks, but is also a complement for banks. So ideally, our client would have a banking relationship on top of us as a tool, and they don't need to replace us with banks. I mean, they can get to a point where their banking relationship becomes bigger through the help of our growth product, and so that no matter who you're speaking to on our team is all speaking from the same playbook. And it really is a unique product. Again, the reason I'm here is because I really understood and bought into why it's such a good product, not only for the clients but for us as well. And so I'm just trying to make sure that everyone fully understands that, and it's not just, again, in the business of selling money, but is in the business of selling solutions.
Welcome everybody to the next episode of the Construction MF'ers podcast. I am Peper, CEO and founder of Mobilization Funding, and today we are going to get into some interesting conversations around banking trends, how to be prepared for banking. I'm going to introduce you to our newest executive on our team. Her name is Rachael Brown. She is coming to us with 13 years of banking experience, and we're going to find out why come to Mobilization Funding? How can you best be prepared as a business to not only win and be successful with a traditional bank, but also with Mobilization Funding and some of the dynamics in between? So Rachael, welcome.
Thank you, Scott.
Yes.
Happy to be here.
Yes, we're not only happy to be on the show, but also happy to be
at the company.
Mobilization
Absolutely.
Funding. I'm very happy to have you here.
Great.
Let's jump right into it. Banks and construction businesses.
Yes.
Why are banks so hard to work with for construction businesses, or why is construction business so hard to work with banks? What is the dynamic there?
Sure. So just to give you a little bit of background, I came from a commercial real estate background, so I've been doing that from the construction side, the permanent side, agency side for as you said, 13 years. And a bank is a very low risk entity. I mean, they have the responsibility of holding your capital. I mean, a lot of people's money, it's all the money they have in the world, and they can't fail, right? So the risk that they are willing to take on is pretty minimal. They want to see experience and history at the level of performance that you need the financing for. They want to look at your liquid valuation, either as a guarantor or as your collateral. And if you are trying to project growth, they're not really equipped to take on that kind of risk. So they really need a lot of strength behind that in order to get any kind of financing that's really above and beyond what you're typically performing at a certain level. And in the construction space, you're going to see a lot of that where you have a job that's a lot bigger than what you've typically been performing, and you have the complete wherewithal to get that job completed, but you might need some more working capital. You might need to hire some more employees. You're going to need to buy more supplies. And sometimes you can get terms from some of your vendors or the different people you're working with, but at the end of the day, mobilization funding is a great tool for the toolbox to kind of fill that gap between where your bank is comfortable and where we're comfortable to get you to where you're trying to grow.
All right, so if I'm a construction contractor and I'm listening to this, I'm saying to myself, why is the bank comfortable financing this developer for a commercial real estate project who isn't going to do any of the work, but yet hire a general contractor or myself as a subcontractor, and then we're going to do all the work? Why are you comfortable financing that developer when we're doing all the work why not finance them but also help us execute all this work? I mean, if you
Right.
like the project, why can't we be financed too?
Right. And a lot of it comes down to that collateral, right? So banks are equipped to feel comfortable with real estate collateral, with cash liquidity from the guarantors. A lot of times these developers are personally guaranteeing it. They probably have a lot of cash with that bank to begin with. And so from, again, a liquidation standpoint, they see a lot of value in taking that collateral. They're not equipped to really spend the time like we are to understand a cash flow model to manage the cash flows. And so they're just not going to be able to execute like we are. You know, when we come in, we fully understand on a weekly basis, you know, what your cash flow model looks like. At a bank, I mean, they're maybe annually looking at it, and it's after the fact, after your taxes have been filed, that sort of thing. So by the time they really understand what's going on, it's almost too late if they're only leaning on those cash flows.
So having experience of decade or more now, saying no to certain situations and yes in others, and flipping that around now, not when we don't finance developers, but now looking at construction contractors, manufacturing businesses, other work in progress, performance-based. How did you, just individually as Rachel, get comfortable saying, oh, you know what, I'm going to take this experience and now go work on the other side of it?
Sure. You know, it's funny, the banks are comfortable with that kind of liquidation value, but when you're in that situation, and I've had workout experience in the real estate industry, you know, your value isn't there anymore, right? And it makes so much more sense on this side to say, hey, if I can fully understand the cash and how it's moving, where it's moving, that's what pays you back, right? The cash at the end of the day pays your loan back. And it's just a product that makes sense for the client. It's a product that we've developed a process to make sense for us. And it made a lot of sense to me. That's why I moved.
So in underwriting everything from student housing to industrial warehouses to your typical apartment complex typical apartment complex build out or multifamily residential space. I mean, there's been a lot of trends over the last 10 years. What parts of that in particular do you think gave you the best equipped of knowledge to come work over here on the subcontractor side? And
Sure.
what helps you think about what makes someone perfect for a loan opportunity and what makes someone not?
Sure. Yeah, the real estate market is interesting because if you really dive into it, it's really trying to tell a story about trends, about projections, about growth. And when you underwrite a lot of different product types, you're kind of seeing how a community and how an industry is working and growing. So for example, in the industrial space, if I'm underwriting industrial real estate, you know, you really have to understand what are the consumer demands. You know, during COVID, there was a lot of stress on the industrial market because we were buying a lot more products from our phones at home. You know, the tariffs are going to create a lot more demand on, you know, onshoring a lot of manufacturing. So while my experience might be in the industrial construction loan side, you know, understanding where those trends are going to help us focus where we, you know, focus our time on our clients and our marketing efforts, and just kind of preempting what, you know, loan requests we're going to see. You know, anything from multifamily, that's a story about where is the population moving, you know, where are people wanting to live. For even something like student housing, understanding what universities are growing, where they might have some needs for future development as well, on, you know, a side that might come to us that maybe I wouldn't have looked at in commercial real estate. You know, that's our growth story there. There's new asset classes like data centers that are really expanding and coming into their own. The build for rent space, we're seeing some opportunities there too. So really it's a story of where are populations growing, where is consumer demand growing, and that doesn't just apply to commercial real estate, it applies to manufacturing, it applies to you know, a lot of different client types that we're going to see. And the more you understand those businesses, the more you can understand the financials of a company that's coming to us, right? So if we have a client that's had a lot of exposure to, let's say, multifamily, you know, we know that that industry has slowed down a little bit when the interest rates went up. So if we look at financials and we see a dip in, you know, 23 from 22, it's going to make sense for us to say, okay, I understand that market. I see where you're going. This is no fault of your own. And it's going to be something that we can potentially look around and, you know, help them grow once the, you know, the market comes back.
Yeah. It's interesting you bring it up because the segments change, right? Like will we keep building storage centers forever, right?
Right.
Or healthcare or data centers. So if you're a contractor that has great relationships with developers, and you've been working in that multifamily space, where are the next areas to pivot to?
Right.
And have you seen anyone successfully do that, such that you could provide some guidance on how they could do it right?
Yeah, I think diversification is important in any industry, right? And so if you are a sub that can do condos and apartments, and you can pivot and do data centers or healthcare, building those relationships. A lot of times it's through the GCs. There are GCs out there that do multiple silos, multiple product types, and if you can express your ability to perform on multiple fronts, you're going to have the opportunity to kind of pivot if one side of the industry gets softer than others. And in commercial real estate, that's always the case. There's always a hot commodity and kind of the ugly duckling. And back in pre-COVID, I mean, industrial was really kind of an ugly product type, and now it's one of the hottest product types, right? And so you really can't just specialize in one thing and one thing only and expect to have a long-term future in that.
Like that. So a lot of construction business owners we've spoken to in the past, they think financing is something you go seek when you absolutely need it, or when you're desperate. Like you wait till you win the project, or you're about to win it, or you have a problem and then you try to seek lending, because sometimes cash is king. It's best to just pay cash for everything and have no debt. In your experience though, how can you use financing as a tool for your business growth? And do you agree with the thought process of wait till what time?
Right. Yeah, and I always said in banking too, I had some clients that just, when I was especially at Wells Fargo's my bank, that's all I need. You can do every loan that comes in. And I told them, look, every bank has a different appetite. Every bank shifts their opinion on what they want to do or not do. Go find some other banks, maybe talk to some credit unions. And it's the same with us. I mean, everything is a tool for your toolbox, and mobilization funding is a very specific tool. And so if you have that bank foundation, that's great. We would love to see a client that has a bank already, but know what else is out there, know what options are available. There's probably a lot more out there than you realize, and develop those relationships early. Not only will that save you a lot of pressure if you really need financing in a crunch, but it will give you the ability to kind of utilize those tools up front to strategize. For example, with our product, it's such a unique product that helps you kind of take on, a purchase order or a contract that's maybe a little bigger than what you're comfortable with. And if you know up front, hey, this is how we work, this is how you can bid on that next deal that maybe you wouldn't have, knowing that up front is a lot better than having it in your back pocket and then realizing, oh shoot, I need to scramble to find financing for it.
Yeah, we like to say a lot, we're not just trying to sell money. Like if you really just need money and you don't need anything else, then find the lowest possible cost, keep everything tight and perfect, and wait for Wells Fargo to give you the loan, assume they will, right? No problem. If that's the case, whatever, who cares? That's great. But if you are, in that example that you just gave, actually going to go for this next little bit bigger project, and you can do it, but you've actually haven't done that bigger project yet, or you're doing 4 or 5 projects instead of 3 or 4. What happens when that occurs, right? Like, what are the dynamics that have changed? Well, if you can work with a lender who knows what those dynamics are, because they've worked with hundreds of folks trying to do the same exact thing you've done and successfully help them, and then we have tools, that's the kind of leverage you want to lean on, whether it's with your lender directly, us, or if you could go to like a peer group and you find like a mentor, like it's the same benefit you can gain. And so I do think you're right. As you lean into those other jobs, you want to try to find not only the money, but the experience that can help you be successful.
Sure. And if you came to us and kind of told us your situation, I look at us as a growth partner more than just a lender, because we're going to be able to help walk you through that process. And even as something as simple as contract review, just to say, hey, let's make sure your terms look right, to make sure you get paid on time and you're not, blowing all your profit on financing costs because of the terms you've negotiated. Something as simple as that could really save a lot of companies a lot of money, and give them ideas that maybe they didn't have coming into this, beyond just what kind of financing do I need.
Yeah, for sure. So on the alternative, what happens if you do wait to the end and you're desperate? What happens then?
Yeah, I mean, there's a lot of predatory lenders out there that are hoping that you come to them needing money tomorrow, and they're going to give it to you, but you're probably going to not only lose all your profit on that deal, but you may have to really dig deep and potentially take your company under worst case scenario if you kind of have to lean on these predatory sources of financing. I mean, I think we look at ourselves almost competing more in the equity space. You know, are you going to come out of your own pocket, dilute your ownership to make this deal work or finance this project, or can you lean on a financing tool, a debt tool that isn't going to be predatory, is going to work with your cash flows and really take you to that next level in a way that makes sense for both of us.
Yeah. All right, so now think about becoming bankable, right? That's the phrase versus what does that mean? If I grow too fast, I can't be bankable. I don't have enough experience, I'm not bankable. I grow just enough, I'm not big enough, but I'm not. If I grow too fast, it's like they can never like thread the perfect needle.
Sure.
So in your experience, what does becoming bankable in a traditional sense to a bank look like? And what's the best way for someone to go about becoming bankable?
Yeah, absolutely. Well, I will say that, you know, we are a product that is not only a replacement for banks, but is also a complement for banks. So ideally, our client would have a banking relationship on top of us as a tool, and they don't need to replace us with banks. I mean, they can get to a point where their banking relationship becomes bigger through the help of our growth product, but you know, ideally they'd be looking at us in the right places to kind of surgically come in and out to help them with, you know, cash flow needs, and then have that bank relationship. And the banks are always going to want to look for a steady, repeatable, you know, historical business model, and anything that goes above and beyond that, that's where we can come in. So when you're first starting out, you're going to be leaning a lot on equity. It's just kind of the nature of the beast. And then once you get to a point where you can prove, you know, you have some cash reserves, you have a history of business at a certain level, you know, you can get a bank to work with you either on the SBA side or on the conventional side. But again, once you go above and beyond that consistent performance, you're going to need some other tool to help get you there.
So what are the red flags that keep people from actually getting these loans with the banks, or preventing them from even establishing a relationship in the first place? Or maybe they have a relationship, but they can't get the next level relationship that they really need.
Sure. Yeah, biggest red flags I see usually is just not having your financing together, or you have a financing package that looks kind of questionable, kind of thrown together. A lot of times that's a red flag because it's hard for a lender to assume that all that information is correct as well. And so you really want to make sure before you go out for financing, have your package together, have your P&L done, have your balance sheet, make sure your tax returns are up to date, and have that ready to go. And then also think about any potential issues that you know will probably come up. So if you have a bunch of aged accounts payable or receivables, if you have some losses in the past years that you need to explain, try to clean that up if you can. If you absolutely cannot, then already make sure you kind of preempt whoever you're talking to some of these and build that story, advocate for yourself, explain your situation. Because a lot of times these issues you can navigate around. It's just a matter of advocating for yourself and explaining why this won't be an issue in the long term, right? And so I think as long as you don't surprise your lender, and as long as you're upfront and your information seems reliable and accurate, you're going to have a much better chance at getting some strong financing instead of leaning on the more predatory sources.
Yeah. So in a world where no is common and everyone thinks it's just like they don't like my industry, they don't like me, I feel like I'm not necessarily going to be the right fit. How does a business owner know, like, actually you're not, like, because you're perfectly fine. This is good. You have your finances. This ratio is good. This ratio is not. Like, how can you guide somebody to not overthink it and think just too negatively?
From the customer side.
Yeah, and I guess let me add a little context. The reason I say that is I think too often most business owners think that they're just not in a great spot, but when they send it in, we're like, you're really not bad. You might need a couple tweaks here and there, but you are bankable, or you are financeable, or this isn't bad. Like,
yeah, I think whatever lender you're speaking to, you should ask the questions. You know, Because what I find a lot of times is someone will call in, hey, can you give me financing? They might get a quick no, and they're like, okay, thanks. Well, you could probably glean a lot more information out of that person instead of hopping off the phone. Who else would you recommend? Can you give me any pointers? What are you looking for? What don't I have? And you could probably learn a lot more information to help you figure that out depending on whatever kind of lender you're speaking to. And then, a lot of lenders just have very kind of weird quirks that they're going to want to finance this and not that, and it has nothing to do with you, and you shouldn't take it personal, especially banks because they're so heavily regulated. If they have too much exposure in a certain industry or a certain location, they may turn you down simply on that and has nothing to do with the strength of your company or your business.
Yeah. Okay, a couple quick questions I'm going to ask you because we get this a lot, or these are questions I've heard a lot from the industry, and I'm going to share them with you now. I haven't been approved by the SBA, so the SBA won't approve me. What is the first thought that comes to your head?
I'm going to pause on that one. I haven't been approved, so they're not going to approve me? That's the question you get? Basically
what I'm going at is the bank, people think the SBA makes the decision, not the bank.
Oh, okay. Yeah. Yeah, so the SBA process is interesting because while there is that guarantee on the back end from the bank is really the one making the decision, and their credit culture can really define whether you're getting a yay or an A, right? And so just because one bank might turn you down with an SBA loan, there are other SBA lenders that might be able to get that business done, and it's not just purely an SBA government decision. It's really the bank that's advocating on your behalf.
So when you're trying to choose whether to go get an SBA loan, is it better to go with a small community bank that you already work with? Is it better to go with like an SBA type shop that could, I don't know where they go. They seem to go to lots of different banks.
Right.
Or you have that relationship with your Wells Fargo, your Bank of America, and they have an SBA person. Should I apply there? Like, how do you decide?
Yeah, and I think a lot of it goes back to asking the questions, right? So if you already have a bank relationship that has an SBA team, ask them, hey, what's your guys' appetite? How likely do you think this will, get done? What do I need extra above and beyond what I already have to maybe get approved? And if they are competent, if they're not just being lazy, they should have some good intel for you before you go through that whole process. They may level with you and say, look, we're not the most aggressive SBA team in town. You might want to look elsewhere based on your profile. And the SBA shops that have more sources of capital are always going to be more flexible in giving you terms if it's something that's a little more difficult to get financing for. It may be a little more expensive, but it's better than going through the whole process and then getting a no.
Right. So if there was one or two things that you would want everybody listening to this to take away from this conversation that could help their business, improve their business, or have a financing tool, what would it be?
Talk to as many people as you can find, speak to as many lenders as possible to just really get an understanding of what tools do you have in your toolbox, and don't just assume the banks are always going to be there or SBA financing is the best option. There are a lot of tools out there, a lot of interesting ways to structure your company to make it most profitable for you and your growth model. And again, try not to just always lean on that one source and think that the banks are the be all and end all.
Yeah. And if someone's trying to contemplate cost and price, like interest rate, lowest rate, highest rate, just around the cost of lending, do you have any advice for them on how they should go about actually looking at what the costs are? How should they assess percentage rates, other costs, total costs, amount to borrow? Is there any wisdom and guidance you could offer in that?
Yeah, always have good projections. I've, in my history, seen a lot of people come to me wanting to invest in something, and they never really projected out what that looks like. And so I asked them, what's your return? What's your target rate of return on this deal? What are you trying to achieve? And they really can't answer that. They just they heard this was a good investment, or this is an industry or a location or a product type I want to be in, and they really don't know why, other than they just think it's a good place for their money. So definitely have your projections in mind, and really understand the cost, not only the cost of the capital, but then the time to potentially close that loan, because your potential loss of a transaction or a deal or an opportunity because your bank took too long or your lender dragged their feet, that's a real opportunity cost as well. So knowing that you have a source of financing that's quick and reliable is really important.
Nice. So the CEO of your new company told me that they're going to be relying on you heavily to look at different businesses and help assess who we can work with and who we can't. What is some advice that you would have for people that might watch this and look at this and not get a chance to talk to you, but might be talking to somebody from the team?
Sure. Yeah, well, we're working on that process to make sure that we evangelize kind of our system, our credit philosophy, and so that no matter who you're speaking to on our team is all speaking from the same playbook. And, you know, it really is a unique product. Again, the reason I'm here is because I really understood and bought into why it's such a good product, not only for the clients, but for us as well. And so I'm just trying to make sure that everyone fully understands that, and it's not just, again, in the business of selling money, but is in the business of selling solutions.
I love it. Well, I couldn't say it any better myself, and I'm super excited that you're here.
Yeah,
I
I'm glad
love
to be
it.
here.
And I'm glad everybody gets to meet you now, too.
Thank you, Scott.
Well, everybody, I hope you found some value in not only figuring out what you could do to help you at your traditional bank, but also in finding other sources of capital, other lending solutions, and of course, what you can do here at Mobilization Funding with our loan program. In the meantime, I hope you all have a great week. Find us on our YouTube channel. If this video helped you, share it with some friends, give us a like or share, and you can catch up with both Rachael and I, not only through mobilizationfunding.com, but also on our LinkedIn. And until next time, have a great week. And God bless you.